Warriors. Happy Thursday. Hi, Craig. How are you? Claudia, welcome. I'd also like to welcome our viewers from investing.com. You've had quite a wild week in indexes with the debacle Monday and the recovery. I have a few things I want to cover, starting off with the dollar. The dollar is going to be good or bad from here. It's a descending triangle, if you notice this. Descending line and then a flat line here. I'm the demarcation line's around 97.15, and if we had broken down, measured 96, but we're threatening an upside breakout, which is a little unusual. Maybe it still fails from here. I'm really keeping an eye on it because descending triangles are normally defined as reversal formations. So from the high up here, you know, the potential for reversal, but still moving sideways in this formation, has not resolved itself. Tried to here, but couldn't close here. So we'll see if we could break this little pink line. My name's Dale Pinkert. Over 97, looks like about 66. So we're not that far away from some type of squeeze again on the dollar, even though, you know, the market is still very heavily bullish the dollar, position on the long side of the dollar. So that's something to pay attention to. You know, I mentor people, and, you know, we learn the most from our mistakes, and this was not a terrible mistake, but I just want to show you something in Euro Aussie here. So I got short in here a couple times, made some money a couple times in here from this divergence here, and then I recommitted right here, and actually would have been a nice little trade. We had the RBA yesterday, right? So we had this spike. It was the Aussie breaking hard and then recovering. But I just want you to look at this, and I knew it was a possibility when I put it on. Okay, but you know, when it happened, I think I was in the middle of my REMs, rapid eye movement dreams, and I was on a hammock in the Grand Caymans with my tablet going over Forex Analytics research, okay, which is what we do here. We provide a lot. Oh, look at this data flash. So maybe we'll have some data. Okay, so that's what I was doing, but the point I want to prove, or at least not prove, just show you guys something here, is, you know, you go to your weekly, okay, what's the most important candle here? It's a rising wedge, rising, not falling, because it was right. It's a rising wedge, and we had a little throw over on it. I think the lines, see, there it is, rising wedge, and then throw over above it, then back inside of it. But the point I want to make, Jeff, is that the most important candle I see on the chart up here was this candle. Everyone see that? Yeah, well, it's okay, Zig. They had medical first before they recreational. So everyone see this candle? Give me a Y. All right, everyone, where my cursor is. So it was a reversal week, correct? Reversal week. Okay, so to find out where it reversed on the week, you go the prior candle. 162.51 was where it turned bad, turned lower on the week. The high on that spike on the RBA, 162.51.90. So within a pip, the market remembered that, how many weeks ago was this? I mean, these are weekly candles. So it goes back to the beginning of the year. And it's almost like it had destiny to check this reversal to see if it was real. So 62.51 I had in my head, you know, wasn't sure it was going to get there, but I knew about it. And if I had known RBA was meeting, I wouldn't have taken that short. Woulda, coulda, shoulda. Anyone ever say woulda, coulda, shoulda? No, this is the whole team, AA. Okay, so you could do that every day. So you know what I say now after this? Next. And it's an important word to have written by your workstation. Winning trades? Next. Break-even trades? Next. Stopped out? Next. All right? Don't dwell. Don't go fetal. In fact, you need to have the warrior psychology and say, okay, Mr. Market, I've done my work. I know why I'm doing it, the contingency. I know where I'm wrong. If that contingency is negated, I know what I'm looking for. If I'm right, go ahead, Mr. Market, prove me wrong. So you have to challenge the market rather than feeling challenged by the market. Everyone with me? So a couple of other things. We have Norm Winsky tomorrow. We have Ben Maldonado today, and Ben has great esoteric type technical background and GAN and everything. It should be great. So actually, there's a full moon tomorrow. And, you know, within 1 or 2 days, there's a possibility that you can get reversals. I'm thinking S&Ps may have this much in it going into it. So my reversal candidates for that time window are S&Ps up here around 2880 to 2900. Okay, the yen better get going because risk on is running out of time. And so I'll be looking for shorts here. Yen's trying to come out of here. So it needs to have a couple good days to get up to where I want to sell it, up around 1060 or so, 1080 or so. And then the last one would be WTI. So you think there's a couple stops over the high of Monday? I was fortunate to liquidate longs up there on that spike. But I think we're going to go for those stops, maybe 61.8 at 375 into that time window. And I'll be looking for short sales in stock indexes, US dollar yen, and WTI. Okay. I want to remind everyone that if you're not getting a check every week, every month, I got up a little late today, okay, that you can get a check. Or you could have your subscription paid for by our sponsor at Forex Park FX, where Justin and Trent can see the forest from the trees and help you find the right broker for you. They're a broker of brokers. So you can either get a rebate check. I know Steve's getting one because I talked Steve into taking an annual subscription to ForexAnalytix, so he doesn't need the reimbursement. He just uses the money to fill up his new Mercedes with gasoline in Greece every week. So you need to talk to Trent. You need to talk to Justin. And also keep this in mind. There's no law against having more than one account. So yesterday when I was interviewing Saeed, you know, this is a new question I'm asking my guests, our guests. It's wonderful to make a great call. Even better if you not only make the call, but make the trade. But the toughest thing to do is to have a great hold. And, you know, I mean, there's millions of examples. Everyone goes through it. Blake goes through it. And I said, how do you do it? You know, I try and go to, well, not try, I do manage positions from a higher time frame so I don't see as many squiggles and wiggles. But, you know, a great hold would have been this. So, you know, Steve Olge and I simultaneously, especially the most jaded guy against crypto, he was buying Ethereum when I was buying this trust, okay? This trust in Bitcoin called GBTC right here at the 78.6. And I had this moving average, so my target was 7, I'm gone. But this is the reason why you just keep a piece. Look at this, okay? So, I mean, when I was getting long here, this seemed unrealistic to a lot of people, 7. But, you know, it's always good to keep, even if it's a small piece, say I just had a third left, right? I mean, there was never really a reason to sell it, consolidated for a while, but then we had the explosion with people are explaining this move in crypto as Chinese flight capital going into it. Yeah, sorry, Jeff. Well, anyway, you did it at a good level. So I want to welcome again our guests at investing.com. And let's have a great session. We do have a great guest. I'm looking forward to talking to Ben Maldonado at the top of the hour. But you know what? I'm coming into today except with no ideas for today. I know what I want to do like Friday, Monday, Tuesday. But right now, no. And let me just wrap it up with this. Okay, so for a while, I've been talking about yields. First of all, Steve and I and a few other guys forecasted this bounce, and this is 2. This is drive 1. This is drive 2. And I don't think the yen bottoms until we take out this. Okay, and that could take us down towards, let's see where it comes in the weekly. Gosh, almost 2%. 220, 220-ish about. And down there, I think is going to be TBT time. Blake sends me the DSI, and I think the bonds are up around 80 again. So I think this is coming up in the next week or so. Maybe this last wave down here for lower yields happens with another wave down in S&Ps after this reflex rally, which, some people are still, that I respect, are looking for new highs. I'm not in that camp. I think there was too much damage done here, but, we're putting in a decent week. It held where it had to. Under 2,800, there's major problems. So, I mean, just arithmetically, 160 handles gives you 2640 right here. Should we take this out? 2640, and I'm sure it's a fib retrace. I haven't put the fibs here. Anyway, Blake, I'm having a hard time waking up. Are you sure it's not Friday today, brother?
It feels that way. And I'm going to give you a little correction from something you said a little bit earlier.
Okay.
Last night was not the RBA. It was Australian employment. So.
Oh, okay.
Yeah, it was just Australian employment, and the number was it was a beat, but the unemployment data came in worse than expected. So higher unemployment, but even though we had a beat in the
it's still like a red number. It's like an NFP. It's like taking a position into a red number.
Oh,
right?
Yeah, absolutely.
See, so I'm a little lazy sometimes, Blake. I'm getting up there. And I'll tell you what, I have to pay closer attention to news events, and I'm a big believer in, not trying to predict them. And all I had to do was check ForexAnalytix calendar that they have and the week ahead video for important red events. You guys that are registered, you're prepped for the week with every major news event. We send it out every Sunday along with Blake's look ahead for next week. So pay attention to the news, if not to trade it, at least for days to avoid being in a market that could, have that type of effect.
And thanks, Dale. And we try to prepare everybody for the week ahead, and that if you don't listen to that video on Sunday, take a lot of time putting that together on the weekends, and obviously it's during my free time with my family to make sure that you guys are better prepared for the next week. And so does the Stelios and the rest of the team actually putting together the newsletter that goes out. But let's talk about today. You said I have no ideas. Well, you said you had no ideas going into today, and I do actually. The cable has been absolutely destroyed. Yeah. Pound's been destroyed. It's broken into new trend lows, and I think there's a lot of support coming into play here very shortly. Let me reset this chart really quick. If you look at the 4 hour for the cable, and you look at the range that we've been in since basically the beginning of the year. So the beginning of the year, here we are, January 2nd. We are approaching the 618 retracement, 127% extension of the last move higher, head and shoulder completion. So if you look at the, if you look at this head and shoulder right here, here, make sure everybody can see what I'm drawing. So you got shoulder, head, shoulder, right? Neckline. So let me erase that.
Nice look.
And then Amanda's been all over this, by the way, all over it.
They have to live in the UK to be as bearish as Amanda's been.
I think so.
Cable.
She's got it. She's definitely got a good handle on what the hell's going on over there. Anyway, I'm looking for a move down to, I mean, we're trading really heavy in the cable. I mean, super heavy, but we should get down towards 127.80 to 90 and then show a bounce. It is trading extremely heavy right now, and I'm hoping we just flush stops below the big figure. I've got some bids sitting down below 128, and so that, like, if you want to know what I'm planning today, is I'm planning to be long some pound on this dip if we can get it, because it's a good, if you think about like the risk reward. Let me grab my pen again. Like, let's say, and just to note, this is a 4-hour, relative strength, very oversold, right? So let's imagine, we make it down to, this level right here. Think about where your stops are going to be. Like, you put your stops, like, let's say 127.20. I don't, I'm just using that as a, round number, not saying that's exactly where I'm going to put my stops, but think about, like, stops here, target back at 129, maybe even, higher than that, depending on how things go. The risk is, here's risking 1 to make 2, risking 1 to make 4, or maybe 5, so those are the types of trades that I'm wanting to take, is just a good risk reward for potential long here. And so that's what I'm looking at. Now, yesterday was a great day. If you were in the ForexAnalytix chat room, when the talks of tariffs, steel tariffs, auto tariffs, which was going to be a big beneficiary to the Canadian dollar, I shorted a lot of dollar Canadian up here, especially as we were in the 60s and 50s. And once we broke through 55, which came in right here, once we broke 55, I just got aggressively short for a couple hours and made some really good money on the short side of this particular pair. Now this morning, we're obviously near a lot of support here around the 134 level. So being short down here, you got to be a little bit more careful with. But it is this was a really good trade yesterday. It actually made my entire week. As long as I manage not to give it back here in the next couple of days. This is a really good week. I could stop for the week and just be done with it. But I'm still, obviously I'm still trading around. I'm looking for good opportunities like the cable. But I think the cable is going to give us I'm hoping some good opportunities from a risk reward standpoint. The problem that I see with the cable obviously is Prime Minister May could be seriously this time on the way out. Now, I actually think that's going to be a cable positive, but the knee-jerk reaction could be negative. On Prime Minister May, if she resigns, I would think there would be a sharp move lower, but followed by a bounce higher. So that doesn't necessarily mean that that's what's going to happen, but it is something that is on my radar and it's something that I am thinking about. But technically speaking, I am looking for this sub 128 level to offer us some support moving into today. Hold on one second. All right. I picked up a little bit of Kiwi on a bid just about 5 pips ago, and I got out of it just because I think I'm a little worried about the dollar here. But I'll tell you why I picked up the Kiwi. I just sold it. because I'm not really too trusting of the stock market right now. But you can see this downtrend line in the Kiwi, this hourly downtrend line. We broke it overnight, and I wrote in the morning analysis for the New Zealand dollar. If you read the basic technical analysis, the Kiwi broke the downtrend line, so as long as we trade above the 65.50, the risk is higher towards the 66-cent level. Now, I bought it on the dip to the trend line here just a little while ago. Just as you were speaking, actually, I got hit on a bid, and right there, and then it just bounced up, and I just took my profits really quick. 5 pips for me, depending on my size, this could be a fairly substantial amount of money. And the Kiwi is, a pretty benign trading currency right at the moment, so I was willing to step in a little bit bigger size than normal. But I picked it up on that bid, and then I just sold it, just scalping, like I said, while you were talking, Dale. But
but nice trade. I mean, you got 5 on size, and while you're here, Blake, Kiwi's been outperforming, creating a potential buying opportunity. I'm looking for about 61.8 in Aussie Kiwi, and I know long term you're pretty bullish there. So you already knew what I was going to talk about. Yeah,
I did. And actually, Amanda, she's been. I reference Amanda in our chat room. She's awesome. Unfortunately,
short.
She doesn't. She's too shy to be speaking on our webinar, which is a shame, because if you're using ForexAnalytix, 5 minutes before the webinar starts, you hear her voice. We have it pre-recorded where it says the webinar is coming online.
Yeah.
But she has such a great British accent, yet she is too shy to come on the webinar. Anyway,
well, she's not shy about clicking the mouse, I'll tell you.
No, she's not, and she's very active in the chat rooms, and she well makes up for it with her activity in the chat room. So, but anyway, she's been all over this possible double top in the Aussie New Zealand. Now, the thing that concerns me about the Aussie New Zealand, because I do want to buy a dip down to the 618.
Okay.
Is if we do have a double top, it actually points a lot lower than that. So that's the rub right now.
Where would it take it to 78.6, Blake?
Below, actually, probably closer to the 88% retracement. So
wow. Okay.
Yeah, if you think about this.
Yeah.
To the 88% retracement that comes in at 103.25.
Yeah. Okay.
Now,
thank you, bro.
Yeah, well, I mean, here's the thing. I want to buy this as well. It's not, I'm looking at it as a longer term play for the Aussie New Zealand to the long
position.
Side. Yeah, it is more to be positioned.
Yeah.
And here's the thing. It's like we could just bounce at the 618, get a double top, false breakdown, and then reversal. It's possible, but I'd have to see the price action down here. Realistically, I'd be more happy, trying to buy below 103.50. Somewhere down in this neighborhood would be my preferred entry. It would be down here, but depending on the data coming out next week, we have like the meeting minutes, the RBA meeting minutes. I think the next Tuesday or Wednesday. We could do this and then get a bounce back. So I will just be watching the price action as we approach 104.50. Doesn't mean that I'll be buying it there. Just, that's something that I am paying attention to if the Kiwi continues to outperform the Aussie, which, as you pointed out, it is right now. So anyway, just something to think about here.
Appreciate it.
Yeah. There are developments, taking shape in the FX market. I think you have to be a little bit careful here because, you have, like I said, you have the dollar Canadian that's nearing support, okay, which means that the Aussie and the Kiwi possibly, are going to struggle here. And remember, the Kiwi actually has to get above the 66-cent level to really start, squeezing. So we are up against some, relatively good at resistance in the Kiwi and the Aussie. So this is a day for me where I'm more concerned with price action and how different pairs respect these levels. I'll give you one last one to chew on before I turn it over to Steve. Stelios is not here. He's off on some personal business for today. He'll be back tomorrow. But before I turn it over to Steve, I wanted to point this out with the dollar yen. And a couple other things. I'll talk about the Aussie yen. The dollar yen is really at a pretty key resistance as far as I'm concerned, and that's this 109.70 level. While we trade below 109.70, it's going to be real difficult for the dollar yen to bounce. However, if we get above this 109.70, that's going to be a pretty bullish event for the dollar yen. Now, I bought and I wanted to mention this, I bought the Aussie New Zealand right after the jobs report last night. I bought it at 75.54, I think is where I got it. I sold it this morning at 90. So when we were traded up towards 75.90, I bought it. Now, if you're a ForexAnalytix subscriber, most of the analysis that comes through the basic technical analysis comes from me. Even last night, during the Asian session update, the Aussie yen push stops below the 161% extension at the 75.50 level following the employment numbers, but hourly RSI remains divergent, which could allow for a bounce. This is the chart I sent out last night, and this is what it looks like after the fact. That it was taken here, right there, when we were down here, and we bounced. Now, again, I took my profits when I got up this morning about 2 hours ago. Does that mean that we're done going up? No, I wouldn't actually mind buying another dip if risk aversion hits the market a little bit and we dip back down towards this 75.50. I wouldn't mind being on the long side and try it again. But it is something that that I am also paying very close attention to, because we are at the 50% retracement longer term, 161% extension as well. So all right, guys, I'm going to pass it over to Steve. Steve, we've got data coming out in a few minutes, a lot of Canadian data, some US data. How you doing today?
Hey, mate. I'm good.
Hi. How you doing?
How have you been?
Good. We have the data that's coming out here. We have Canadian manufacturing data. We have building permits.
Let me pull data flash here.
Yeah, I was going to say, you got the data flash, and a lot of people don't understand that is a pop-out window now on ForexAnalytix, and yes, you can move it around your screen. So
absolutely, make sure you don't block it, because pop-ups might be blocked by your browser. So
you have to click always allow from ForexAnalytix so you can get that pop-up.
1 minute before the release.
Exactly. 1 minute before the release, as it says.
Guys, you could also have your Twitter stream. You could have everything except your trading platform on our site. So you really don't have to go anywhere except to click your mouse for a trade. Everything's right there at your fingertips.
That was the goal that Steve and myself and Stelios put together originally. So
nice.
Yeah, we wanted everything to be available besides your broker's platform. Exactly. So we wanted ForexAnalytix to be a one-stop shop.
We'll do that one day too. Have a broker's platform on there so they could just trade from this.
All right, guys. Hey, good luck today. I'll catch you a little bit later.
All right, Blake.
Thank you, Blake.
Good hunting, buddy. Hi, Steve.
Bye-bye. Hey, Coach.
I'll hang with you on the data here.
Yeah, 10 seconds before the release, as you see. Let's see. There we go. 212. As you see, U.S. initial jobless claims 212. U.S. housing starts a little bit better than expected. Use building permits slightly better. Use continued jobless. As you see, data actually are exactly as expected, more or less.
Yeah. They included the tent that I built under an underpass.
Canadian manufacturing sales quite better though, 2.1 versus 1.0. So the US data were exactly as expected. I mean, the deviations were, not even to consider. They were minuscule. And Canadian data a little bit better. Let's see what the USD CAD is doing. Speaking of that, because the rest of the data should not be really moving the market, given the fact that they were priced in. As you see, USD CAD has been extremely frustrating lately because it's been doing nothing, as you see. I mean, we broke out of this triangle, but still maintained this ascending channel, and now we've spent a decent period of time consolidating between roughly 135 and 133.80.
Like the crude has since the top, Steve.
Yes,
chopping
yes,
around
absolutely.
like this. Yeah.
Absolutely, absolutely. If we have a look at crude, here it is on the 4-hour chart, you can see that we haven't really been doing anything. I mean, we've been trading between 63 and 60. We've had some sharp moves, but we're really not doing much. We're not showing continuation lower. On the other hand, we're not accelerating higher. I'm monitoring this channel. This is probably going to be a good tell of if we have more downside to come, or we might have seen the full corrective move to the downside unfold. Personally, I'm still holding 2/3 of my initial position, and if we continue lower, fine. Otherwise, I'm going to book the rest of it.
Steve, I'm curious. Does that line you have above the crude come in, say, around 63.75 to 64, which is about 61.8 back?
It's 63.5 passes from 63.5 currently. If we want to feed this, move to the downside, it's 61.8 is at 64 roughly, and the 50% fib is at 63.20. There you go.
Yeah. Okay.
Yeah.
And the line comes in there too, right?
Yep. By the way, gold. Speaking of which, gold has been moving during the past hour. I'm monitoring this channel. If it doesn't actually continue higher from somewhere here, I'm probably gonna just close my position. I reversed my short, taking last profits on my short to a long. I want to see if this channel, this little channel here, which can be a bull flag, is going to hold. Otherwise, I'm probably going to bail out here. Gold isn't really doing much, and silver isn't really doing much as well. So, I want to see how it's going to play out today and tomorrow to close the week before I determine. But definitely silver. Silver hasn't given us any bullish sign in a long time. I mean, since we had that spike higher there in the middle of February. No, actually, it was the end of February. We've been dripping lower. Now, this can be some kind of a descending wedge, in which case, we can break higher. But so far, the price action doesn't really give us such an indication. I mean, silver has been unable to rally even on the days that the dollar was weakening and gold was rallying. So, this is definitely not a good sign if you're bullish. Platinum still dripping lower. 875, as we've said, is the bull bear line. As long as we're below it, keep looking lower. And palladium, I think, still has the potential for more downside price action as long as we're staying below this broken channel. Even a corrective move on ABC, would seek a quality at decently lower levels. So I'm still holding part of my initial position here, 1/3 actually, hoping to see another dump lower. Now, what I wanted us to see is the DXY, because the DXY, if you remember, I mentioned it yesterday as well, I've been quite clear that, despite, the pullback in the DXY, we never saw any characteristics that were anything else than a corrective move to the downside. And, this formation, now we're testing resistance from this triangle. And this formation, as you look at it, I mean, you don't need to be a market expert to see that it's slow, it's overlapping. And, as I've been saying by showing the daily chart again and again, we have not violated any level that would turn me bearish the DXY for now, right? I mean, for example, this very basic ascending trend line support, which has been supporting price action since February of 2018, is still holding and defines, the very basic uptrend, higher lows, and we didn't even manage to test this in this pullback. So I do think that the path of least resistance remains to the upside for the DXY. And going back to the 4-hour chart, I think that if we do break above this little confluence of this horizontal resistance area and this descending trend line resistance, both of them roughly at 97.70. You remember that 97.70 has been a very key level for the market. I mean, we had to get rejected 3 times from this level before we actually managed to penetrate through it. And after that happened, we pulled back lower. A lot of people were talking about a false break higher, but I keep saying that, for it to be a false break higher, we need to show some signs that we've actually turned bearish. And, as I was just saying, we had no such sign. So another break above 97.70, in my opinion, is going to be quite a bullish development. And this time, I think that the chances that we're going to push higher than the previous time, so higher than 98.33, are very, very decent. Bottom line, don't be short the dollar if we do bridge through the 97.70 level. Now, if you want to be short the dollar, this is exactly when and where you want to do it, right? You have a very well-defined risk reward. And even if you want to be a little bit more cautious and you want to leave a little bit more space for this trade to breathe, you can still keep your stop loss above this high there and set your first target at a retest of this low, which is, more than a 1-to-1 risk reward ratio. And then obviously, if we do break below this horizontal support area, then you should expect more weakness. So if for some reason you want to be short the dollar, this is where you should attempt to do such a thing. Personally, I'm not going to be doing that, okay? Because I see that there is a very high probability scenario that we're going to break higher. Now, I'm in full agreement with Blake having to do with what's happening here in the USD yen, meaning, let's see it on the daily chart, that we are currently backtesting support as resistance. You can see it here. Actually, this area, this 109.70, 110 area has acted as support resistance multiple times in the past. So be a little bit careful here. I wouldn't be surprised if we get rejected from here and move lower towards this multi-year symmetrical triangle support. But if we break back above it, obviously that's going to be, a short-term bullish development. But as I said, a short-term, that doesn't mean anything because we're still trapped within a symmetrical triangle, which means that I have no reason to take any position short or long with time horizon more than, a few hours, maximum a couple of days. So personally, I'm staying out of the USD yen because, it's not the kind of trading I prefer to do. So, I have no real reason why I would want to get involved with it. I think that, the big opportunity with USD yen will be an eventual breakout from this triangle, which eventually is going to happen. And when that happens,
Wow.
probably we're going to have, imagine all this, all this dynamic energy that has been
2 years.
No, it's been 4 years now.
Oh my gosh. Hey, Steve, I'm not sure if you caught the Skype, but Grega would like to pop in.
Oh, no, I didn't. Sorry, when I'm looking at the chat, that's actually excellent news, Grega.
He
Where is he?
Skyped. He asked if he, I don't know. Gregor, come on in.
Okay, he's going to be popping in probably.
Okay.
Okay, that's going to be excellent, actually. Let me go faster then to have a look at a few things. Hi, Steve. Could you mention Euro Aussie, Euro Kiwi, Aussie? Yeah, absolutely. Let's have a look at those. Euro Aussie. So, Euro Aussie. I have to say that Euro Aussie, if you remember, we were monitoring this range. You can see it here. And we've broken above it. So, you need to respect the potential for more upside. Okay.
Did you see my review? You know where it stopped, Steve?
Where?
Right at put up your weekly.
You want me to see it on a weekly chart? Sure.
Put it on the weekly.
Here it is.
Okay. You see that big candle up there where it peaked? Look at where it turned lower on the week before of that candle.
Here.
Look at today's high.
Yeah,
Same price. Same price. What the market has a memory. It peaked right where that high, that reversal week took place. Exactly.
Yeah, might be the case, but one thing is for sure, I really can't turn bearish this pair.
Well, yeah, I know.
If we don't break down again below this 161, 161.20
It will.
level. Yeah, eventually everything will. Now,
Yeah.
having to do with Euro Kiwi, I said it the other day, and nothing has really changed. If you're bullish, the good news here are that we haven't even managed to pull back. The bad news is that we are exactly on horizontal resistance area, previous high here as well. So obviously I can't advocate to anybody buying it up here on resistance. It makes absolutely no sense, right? But if you want to be short, at least you know where you're wrong. I mean, if you want to be short here, you can place a stop loss above this high. You know that you have two areas of resistance, and you can be looking for more downside. But personally, if I wanted to short it, I would first wait for a break below this 200 DMA and this ascending channel support. Both of them pass through, what is it, like 169.70, 60, something like that. So I think that a move below 169.60, 169.70 is a good omen. If you want to be short, I think that then you can be looking for more downside. Easily we can retest this 166 horizontal support resistance area. So quite an appealing risk reward ratio, even if you want to wait for this breakdown first. Okay. Because you can still see just by eyeballing it, you can see that the risk reward would be roughly, I don't know, 2 to 1, something like that. That's the situation here. Now, on the other hand, if we do break above this, then 174.50 is the next area of interest. Kostas is saying that the SPOOS is moving. Let's go and have a look at it on the 4-hour chart. By the way, there is a chance that the S&P has found a low, right? I mean, we had a corrective move lower that channeled quite nicely. And where did we find support? There it is. So we had a move lower that channeled quite nicely, as you see. And where did we find support? At the confluence of the 61.8 of these wedges move higher, so this last leg higher. And as you see, this level is also an area of interest. It has acted as support resistance multiple times. So quite a nice area to find support. That's why I actually closed part of my short position exactly at this confluence of supports, because I also wrote that on the chat room the moment I did it, because I thought that this is an area that can cause a reaction. Now, keep in mind that we're currently testing confluence of resistances here, so I wouldn't be buying it here, but having broken above this descending channel is a first bullish sign. Now we're testing the 38.2% fib. I want to see what's going to happen today. It's going to give us a much better indication. Now, I would still believe that there would be more downside, but I definitely, for something like that to play out, I would definitely not want to see the S&P rebound higher than the 61.8 and also horizontal support resistance area of this move lower, which is roughly just below 2,900. Okay, so I would understand why somebody would want to try being short, accumulating a short position anywhere between here and the 61.8, expecting a move like this, right? Something like this. But you know, if we make it above that, I would be very, very cautious. And I have to admit that, you know, it doesn't really matter if this market is manipulated or whatnot. It is, but it doesn't really matter because, you know, you have to trade what you see. You have to trade the price action, and the price action says that the pullback we had, you know, considering the big shock, because this market was rallying higher again and again and again and again, just by the stupid US-China trade deal rumors. And you know, once this situation goes south, we get a pullback which is so far very orderly, very well behaved, and you know, even from a standpoint of the speed of the move or the momentum, nothing to write home about. I mean, we had a move like 5% lower within like a couple of weeks, right? So nothing extraordinary. At the same time, and you know, I kept talking about this level. At the same time, the DAX found support at this ascending channel support. Also, 11,800 is a huge level for the market. We kept saying it again and again, and you know, it found support there. So the DAX also holding quite nicely. By the way, Joe is reminding me that yesterday Joe was on Bloomberg representing ForexAnalytix, and he said, you know, buy. Joe, actually, if you want to speak, just you know, speak instead of writing. I see you're on the webinar, so just you know, unmute yourself and speak. So please talk about Bitcoin and Ethereum. Thanks. Yeah, sure, absolutely. Massive moves higher, massive. Okay. I mean, we had an orderly uptrend and then we accelerated higher. So far, so definitely, at least we've broken, you know, the downtrend. There's no question about it. Now, in my opinion, first area of support is at 7,400. So basically, we are in, you know, until proven otherwise, we are in buy the dip mode. Okay, so areas to be looking.
Hey guys.
Hey Grega.
Hey, what's up?
Welcome.
You're looking at Bitcoin. Oh my God.
Yeah, people ask for it. Don't forget that I was long Ethereum and you know made a killing here in this market. You know, I said to myself, you know, I have to trade it a long time ago. So you know, I insisted to stick with it, and you know, I got rid of the last of my position at 200, but I made a killing in this trade. Unfortunately, I didn't keep it for longer, but you know, I don't ponder over that. Do you think, by the way, that this rebound that we're seeing in cryptocurrencies is the beginning of a larger move or some kind of a sharp correction? What do you think?
Yes, I think that we can see more upside, but not from here. I just think that this extended move will now slow down for a couple of weeks, and that market will actually reverse back to the upside after some deeper pullback.
Might be the case. Ethereum, at least so far today, seems to be getting rejected from a major level here. A nice confluence of resistance is the 23.6% fib and also horizontal support resistance area. So, yeah, a little bit of a bad sign.
Could it be $3,000, Grega? In round numbers, that would be about 61.8 of a $5,000 move.
Where on Bitcoin?
Pullback, yeah, pullback. Back to about 5.
Pullback, I would be looking for a pullback. Just let me take a look.
Take over the screen.
To 7,000.
That's it. Okay, that's not much.
Yes.
Okay.
Let me pass you the screen, by the way.
Yeah.
There you go. All yours.
We're off to hear the wizard, the wonderful wizard of waves.
It sounds like a cartoon. Okay.
Because he has all the alternate counts.
No, I don't have all okay, so firstly, before we go to this Bitcoin, now you both probably remember that I said in the few weeks back why there can be room for more upside on Bitcoin before we got this extended move. So if you recall, we were looking for Bitcoin price, which was already trading away from the lows, but Bitcoin longs versus Bitcoin shorts. So this ratio was still at the lows back then. Okay, so it was on Bitcoin around 5,000, but Bitcoin longs still didn't actually came to life. So what happened, and what I assumed, that from this lower side of the range, that longs were still in front of us, and actually this has proven to be correct. Market actually just extended to the upside when these longs stepped in. So now I see prices at the upper of these longs very extended, overbought at the upper side of this range. So now I think that market could actually slow down in the next few weeks. So be aware of pullback. Also, another thing that is important is probably this one. Just a second. Okay. So this is Bitcoin versus stock market versus Nasdaq 100. Nasdaq 100 made a pullback, and like every other US indices, while the Bitcoin moved to the upside. And what I see on stocks is that actually we have retraced into some very interesting potential support levels. We already are seeing some signs of recovery. So if that would prove correct, if bulls on stocks will again come to life.
Speaking of which, Gregor, what is your current assumption so far? Is it a corrective move that has already ended, the one that we saw in stocks, or is it, or that was the first leg of?
I assume it has ended.
You assume it has ended, because to be honest, price action does look like this, at least in the S&P. I was just talking about the fact that we broke above a descending channel that was containing the price action as long as we were correcting lower. So you're also assuming that we're headed to new highs from here?
Maybe not to new highs straight to the upside, but I would say that there is room for 2,900 on the S&P 500.
Yeah, that's a 61.8.
Yeah, so for now, I would be looking for, let's say for the next week, maybe two, I would expect more upside. But in the short term, there can be a pullback. Now, if we take a look on this S&P 500, okay, you can see that actually market came down overlapping here. It came down back into this wave 4 of 1 lesser degree, and what is happening at the moment is market is breaking above this trend line resistance. Okay, so I know that this is not any clear bullish reversal pattern, definitely not a clear 5-wave move, but maybe is this a leading diagonal. What I also like here, okay, is that actually market came back into this gap from Sunday. So maybe now we will see a slowdown of bulls and a pullback for a wave 2, maybe only for a wave B, and then another push higher. So for now, I think that S&P 500 is suggesting that actually we may see more upside. Nasdaq 100 is actually looking much clearer. I'll show you here. Okay. Actually, this can be counted as a wave 1, 2, 3, 4, and wave 5. So I'm thinking that we will see more upside, at least in 3 waves. Also, if we take a look on DAX,
Yeah, I was showing that the DAX found support at, very nice confluence of supports actually. So that's definitely a bullish sign.
On DAX, last time when market turned to the downside, I highlighted that we should be looking at this zone as a potential support based on the previous size of corrections. In the previous downtrend, we had a pullback from 600 to 650 points, or from 500 to 550. So 500 to 650 points was a range, and this is exactly what happened here. We have seen a pullback of 600 points around there, from where we have seen a very nice bounce. Also, here was this previous swing low support and even small gap. So the trendline support that we are seeing right now, which I'm sure that you, Steve, highlighted as well, is also, we are above this trend line. That's why I think that we are moving back, potentially back into this bullish phase. And if we're trying to match this with Bitcoin, with this chart, okay, then clearly I think that things are very clear. Actually, the Bitcoin is showing evidences that we are at the final stages of an extended wave 3. Okay, let me just show you this as well. A lot of screen, a lot of charts. Okay. Okay. So here it is. That's Bitcoin. It's a very strong extended move to the upside, as you can see over the last few days, but right into very important Fib resistance levels. There's also, I think, very important swing high back from July. So with everything to put everything in the same context, with the Bitcoin longs, Bitcoin shorts ratio with stocks, and Bitcoin is again trying to appear in the media. So it looks like that we can be in these early stages of a wave 4 retracement. And if that would prove correct, then watch out for the area of a former wave 4. Okay, either of a 1 or of 2 lesser degrees. I would pay attention to this zone, this yellow box. So the lower side of this previous fourth wave was at 6,750. Okay, so that would be, so that's why I said today that around 7,000 there, that's the area where I would anticipate that this market, this pullback would actually slow down.
What do you think, by the way, about, do you think that crude's correction over lower might be over as well at the same time?
Crude oil is, as we talked already last time, crude oil is very tricky at the moment. I mean, it's not very clear if this was a 5-wave reversal, and we are now, just let me adjust the wave count here. Okay. And if we are now making an ABC retracing back to 64, or is this start or beginning of a new push to the upside, if we consider that this can also be maybe A, B, and C.
B, C, yeah.
So it's a very...
Still not clear, yeah.
Yes, not very clear. I mean, 64 will be probably a decision point, the 61.8%. That comes in there.
You know, it's also tough to short crude with the geo backdrop right now. I mean, you know, you're seeing headlines about our president saying that we're in imminent danger with Iran, and the British coming out and saying they don't see any kind of higher threat. And as things devolve for President Trump, it goes back to biblical times. Wars are started to distract and unify. And so, you know, there could be a military accident there with all the hardware in the Persian Gulf right now. Hard to be short crude in that environment, don't you think? And I want to sell it up there, but yeah, that's in the back of my mind, you know?
Yes, and what I see actually is we don't have confirmation from other two markets. Heating oil and Brent is picking up here, but heating oil is already very close to its highs. So maybe, yes, maybe crude oil is just lagging but it's in a pullback, or at least
I'll try it anyway because I like to hear the ice crack, but it is tough to do with what might be on the horizon. Maybe that's why it'll work, is the guy in the street would say buy oil because there could be a supply disruption.
yeah.
Right. Are you guys seeing those headlines in Europe too? What are they saying about what the U.S. is doing with Iran right now? What kind of news flow are you guys getting on the other side of the pond?
Probably very similar compared to yours, because as you know, our media is definitely under influence of US media.
Okay. How about you, Steve, in Greece? Anything you're hearing?
The same situation, more or less.
Okay. All right. Well, Greg, if you want to wrap it up with your highest conviction count right now, because I have Ben Maldonado in the wings.
Actually, what I will take a look at is also dollar index.
Okay.
Just a very quick, brief outlook here. So dollar index still moving higher, but notice this wedge that we are trading with. I mean, it's obvious that market is not that strong anymore, like has been a year back. So I think that we are in wave 5 here. We may slow down, but at a new high. The most important for intraday traders would probably be this structure in ABC setback and a 5-wave rise. So it looks like that more gains on dollar index will be seen here. We are now at the upward trend line of this parallel channel. So watch out for another push to new high.
Okay, so you're still 98.80s on the table.
Still, yes.
Okay, buddy.
Okay.
Greg, you're the best, bro. Thanks for stopping in today.
Thank you, Steve.
Steve, you're second best.
Bye bye, guys.
And I'm on the bench, but you guys bring me in for interviews. I'm the designated interviewer. So with that being said, Ben Maldonado, looking forward to hearing and seeing your exceptional work. Welcome back to FACE. I'm now making you the presenter. This is Ben Maldonado, everybody, and you could find Ben. Ben, you have it?
Hey, Dale.
Hi, Ben. How are you? Just
Good,
waiting.
how are you?
Good, bro. I'm just waiting to see your screen. Okay, here we go. Okay, and your new company. So, Ben, we don't have to go over your journey like we did the first time we met you. And I've been following your stuff on Twitter, and you make some very prescient calls. And your style of technical analysis is, for most people, very advanced, esoteric. It's completely unconventional. You have geometric things, and I just want to let you take over the control of our TV here, like the Outer Limits TV show in the 70s, and tell us what's on your radar here. And also with the full moon coming up Friday. And do you pay any attention to Bradley indicators?
Yeah, I look at it like at the beginning of the year just to see where where the turns are and what they're looking for in the upcoming year. I don't use it to trade, but a lot of the stuff that I do is you can't simply rely on it to trade, but it gives you sort of the background weather.
Because it nailed the low back in March where we had that little pullback, and you nailed that low too. I remember I was having a mental battle within myself of there was a Bradley turn date. Ben was liking it there for another big rally. You're part of my intelligence gathering, buddy. And a red weekly reversal candle. And so I went with the weekly reversal, but then Monday it just came in and blew to the upside. That was also a Bradley turning point day. I forgot exactly what the date was. And we have another one coming on Friday. So where do you want to start today?
Well, what we do a lot with the +3 forecasting stuff is we do a lot of day trading. We love day trading, but today I wanted to sort of switch it up a little bit and start with sort of longer term, bigger picture macro stuff from a cycles perspective.
Beautiful.
Because we're in a really unique time in that there's a confluence of a lot of cycles that have been hitting over the past 6 weeks or so, and will continue for another 2 to 3, 4 weeks. So we're in a major sort of change period, and I think it's why we've seen a lot of choppiness in the markets and not a lot of trending and a lot of one day it's this, one day it's that, as the human beings that are interacting with the market sort of adjust to this different energy and this different sort of cycle that we're entering. So let's take a walk back in.
That's what makes you a watchman, because you alert the public to things that, you know, most people would not have awareness of, the kind of cycles. You know, a lot of guys are talking about cycles that are coming in here that, you know, I'm not talking about a presidential cycle or, you know, just a regular business cycle, but a lot of the guys that I read, they're talking about things that haven't happened in 400 years, 700 years. I mean, these are the magnitude of what's a lot of these guys are looking at is really huge. So
beyond anybody who's living lifetime.
Yeah.
Some of these
so I mean, it's outside of our experience, you know, during our lifetime. So it's going to be new for us, but it's happened before, right? You know, history doesn't repeat, but always repeat, but it usually rhymes. So
absolutely, and we're going to show you some rhyming, and we're going to play a little game, Dale, and you're going to be a part of it. So,
okay, buddy.
Can you see the chart with 72, 75?
Yeah, with the big yellow circle.
Yeah. So here's a period where
Nixon.
Absolutely. This is
Nixon, Trump.
That's right. We're connected here.
Okay.
And it's not by anything other than the cycles. We are connected. The things that are happening are, as you said, they're not exactly repeating, but they're rhyming. And I want to go over some of the things, and we're going to play a game. I'm going to say something that happened in the 70s, and you tell me what it connects to today. So in the 70s, there was this group of stocks that everybody bought because they were going to grow no matter what the economy did. They were considered safe. Everybody piled into them. It's called the Nifty 50.
Right.
What's the parallel today?
FANG.
FANG, exactly. Everybody's buying Facebook, Apple, Amazon, Netflix, Google because they're going to grow. They're growing faster than the economy. It's a place to put your money, and you're going to be safe there.
Right. You'll take advantage of the revolution of new technology that's wiping out the middleman.
Yep.
Okay.
So similarity number 2. President Nixon was attacking the press relentlessly during his presidency. One of his quotes was, "The press is the enemy." Well, what's that equate to today?
Same thing with our current
fake news,
president.
Right? Fake news. Trump says the press is fake news. The press is the enemy of the state. Another similarity we're dealing with. Here's one you'll love. Nixon, first president to ever visit China. Happened in 1972.
That's a neat.
China became important now for an opposite reason, right? Today, China is everything now, but it's because we're in a trade war with China. First ever trade war. Our first ever really major encounter where we're butting heads with China publicly, openly, just like back in 72 was the first time we ever had open relations with them.
Right. So we opened the door in the 70s, and we're trying to shut the door after the elephant's out of the cage.
Absolutely.
Okay.
Here's the kicker. The last one I'll go over with you. In 72, prior to the election, Nixon pressured and got the Fed to cut rates to help his election prospect.
Arthur Burns.
What is Trump trying to do right now?
Yeah, same thing. And that was Arthur Burns.
He's doing the exact same thing. He keeps telling Powell, give me QE, cut rates. We'll really get things going.
But Burns accommodated Nixon. Do you think Powell Do you think Powell will accommodate President Trump?
You know what? That's the big wild card, and that's the beauty about the cycles. It's not written in stone what's going to happen. It sets up the environment for similar things to be able to happen. But
because you know, Ben, and I know I've interrupted you a lot, and this is going to be the last thing I'm going to let you.
No, it's okay.
No, but the difference is that if Powell acquiesces, it's not going to be because of the request of the administration. It's going to be because of the S&Ps dropping below the December, January lows, and S&P's trading 2,000. Because I believe they're S&P dependent, like Peter Bookfire says, instead of data dependent.
Yeah, and listen, you may be right. You know, we don't know what's going to cause them to do it, but we know the table's set. Right?
Okay.
The background weather is there, the table's set. So here's the S&P in 72 to 75. You know, I'm going to point out a few things. We started with a low in mid 1970, big rally up into this megaphone top, and then we rolled over down into the 74. Now check this next slide out. This is the current market. Big low in 2016. You can either take the low in January, February, or you can take the election low where Trump got elected. Big rally up. We're doing the megaphone again. If we follow the cycle, this is what we're looking at. So what's been happening in here and why we're getting this crazy price action and these wild swings is the cycles, as they hit and begin to change, people's perceptions begin to change. People's interpretations of value and what they see in the market begin to change. And as it hits that tipping point, this is where we're going longer term. Now, is it going to be this bad? Is it going to be exactly like 72, 74? I doubt it. Who knows? It's going to be a little different. It's going to have its own nuances.
Does your arrow, your Purse Orange arrow, imply a new high from here first before that takes hold?
Before this last break, I was convinced we were going to go to a new high. I was thinking we were going to go. The odds were there and probabilities favored going to 30-40 to 30-60.
Okay.
The level of damage that's been done with this last decline has reduced that probability. I still think there's a chance we push up. Maybe we push up to hit the top of this megaphone one more time before we kiss it goodbye.
That would still be about 30-50, right?
A little over 3,000, maybe 30-20, 30-30 is possible. But we got to be on alert for the fact that we may have, crossed the Rubicon already.
Yeah.
So
I'm leaning that way. I actually have some stuff. I'm looking to sell this reflex rally into this weekend around 28.80 to 29.20 in there. So I actually think because of the damage you've cited with things like Google, I mean the things that people love, Intel, they were the canaries. I'm going to look for a failing rally here first.
Yeah, I mean,
right or wrong.
I'm on alert watching price action. I want to see where's this rally going through? What levels can we get through? What resistance can we get through? Where do we get stuck? Is it sloppy? Is it strong? I mean, I think we really got to watch it to get clues as to what direction it's going to take. Is it going to make that new high, or is it just going to make?
And your cell phone number is? Just kidding. I'll call you at 2 in the morning, Ben.
Yeah.
And we're getting a negative 4-hour candle here, buddy. What should we do? Go ahead.
Yeah. So let's now I want to take a run and look at a couple other sort of popular markets that we everybody likes to look at and everybody likes to talk about. The one thing I want to give a sort of an overview is all of our work and our tools that we do. They're designed to take this sort of limitless environment of the market, because the market is limitless, right? It can do anything, it can go anywhere. And what we have to do as traders and what we do with our tools is we try and shrink it down into a much smaller area where we can engage with the market with a favorable risk-reward ratio. In other words, what are levels, what are areas, what are patterns that we can use to create an edge when we go into the market. So everything you're going to see, and all the stuff that we do and I post that you like has components of these different things. And I'll show you some of this in the chart. So here's daily gold. Right? Daily gold has been channeling nicely. The things I'll point to here, the key level on gold is around this 1350 area. As you can see right here, this is very, these thick red lines are very important geometric support and resistance. You can see here back in 2018, we were sort of oscillating around it and vibrating around this level, trying to decide which way to go. Once we got above it, checked back to it, see where it held here, then it gives you the pattern to launch right up into the next square. And here we got stopped, couldn't get above it, so we're stuck under that. Until gold can get above and sit on top of that, the upside is going to be limited and capped. Areas where we can see potentially gold going, this midpoint here, extremely important. You can see multiple times where prices come into it.
Where's that, 1240?
The midpoint is about 1274.
1217? Okay.
1274.
Oh, 74. Okay, thank you, Ben. Does the channel break mean anything to you?
It means we could have a push up, right? We broke out of that channel, so that it may try and push back up into this area. That's why we got to watch price action and see where it stops, where it gets caught. Because we're also above this midpoint here, so there is some strength short term that's going to come in. Once we get below this, then you're looking at levels like 1250, 1237, and in a really, really bad push, you can get down to 1200 where you have this strong support here. So gold overall is, big picture looks bearish. Short term looks like we could move higher, and they're going to try and push it. I'll show you the gold weekly.
Was there any analog with gold, what gold's doing now compared to the Nixon era? I mean, we came off, that was the end of Bretton Woods, wasn't it? Or that was Bretton Woods?
I didn't do the cycle research on gold specifically, but I'm sure there are some connections.
So when you come in for an interview, you'll always have homework to do after you talk to me. Yeah.
Here's a look at gold on the weekly. This is some more geometry, just a little different than you saw on the daily. Anytime you're below this XD line, you've got pressure to the downside. So we tried to get above it earlier this year and failed. Now we're stuck below it. We're also stuck below this major line on the ellipse. That's also another point of support and resistance. As you can see, the pressure on gold on a longer term to the downside, and wouldn't be surprised to see it come down to these levels here.
Where did you learn about these types of geometric formations? Are they something you created, or you read and learned about it? Because most people, I don't see many. This chart that's up here right now, 1 out of 10,000 would look at something like this. How did you learn?
This particular tool, this one here, this XABC with the lines on it, this was developed by my partner. And he taught me a lot in terms of geometry. And I also, you read books, you read about what Gann did, you read about, there's a good, Bryce Gilmore has a book that's called Geometry of Markets, really good information in there. And the reason that I think it's important is it works. It's there. You see it every day. You see it working. So it's another way, again, that as we talked about, big picture, it's another way to take this limitless environment and squeeze it down into a smaller area where you can operate with an edge. So that's the look. Here's copper. Copper is another one that you love, Dale. So I worked up some copper for you. This this is weekly copper with similar tools on it. Copper again is under pressure. You can see based upon the geometry, we're stuck under one of these equilibrium lines, so that's going to act as resistance. 279 to 279.50 is very important resistance. As long as we stay below that, the pressure is going to be to the downside on copper. Targets on the downside, 263, 253, 230. If it really wants to get going and it can get ugly, you could talk about, down here at these support levels, 218, 183. If the economy falls off a cliff.
Do you know that Dr. Copper is getting sued for malpractice? Do you know what the charge is?
What's that?
Impersonating a bull market.
Yeah, Copper.
It was. There were a lot of people that loved it when it was, trying those upper levels near your purple line.
Again,
recovery, China, a lot of people liked it.
Look at the geometry on this.
Yeah.
Okay, look, came up here, didn't make it. Took another shot, got above it, couldn't make it.
Yeah.
Took one last shot to get above, couldn't make it. We go down. And then look at where it finds support, right on this point.
Right. And where it failed, Ben, up in there that after it went to support and went up there, that was 61.8. So the question I asked myself was, S&P is making new highs, recovering. Why is the copper only retracing 61.8? Why is Freeport-McMoRan only retracing 38%? So, there were all kinds of signals that this trade deal may fall apart.
Yeah, and that intermarket analysis is good in terms of helping to give you confirmation for what you think you're seeing, right? Does it make sense with what the price action is doing? Because we all have our macro theses and our macro theories, but you gotta look at price. What is price doing?
Yeah, that's more for over. Yeah, that stuff is for over a beer, a cup of coffee. But let me ask you this, Ben. You have a lot of these macro ideas. When you're entering a trade, how far do you drill down for your entry time frame wise?
For the day trading stuff, we do 4 minutes. 4 minutes we'll do. But on these bigger picture moves, I like to use the daily as a sort of a trigger, and then go down to the 4 hour for entry.
Okay. Another question I've been asking everybody recently is, it's wonderful to make an accurate forecast that manifests and even, be there for some of it. The most difficult part for a lot of traders, and I'll include myself in this, is having a great hold. Okay, so, you get out, you've made a nice trade, you go, yeah, I'll get in on the next reaction, and it goes without you. Like, I was long GBTC near the lows. So how do you turn a great forecast into I know how you turn it into a great trade. How do you manage trades once you're in them to make them a great hold?
Dale, I think it all starts with having a good basis of the reason why you got in, and analysis as to why you got in, right? Defining how that trade is going to go, and then using the price action within your framework to say, is it still confirming? Is it still confirming?
Beautiful.
Is it doing what it's supposed to be doing in order to fulfill this original forecast with all the research and all my background material that I put into it? If the answer is yes, and it's respecting these levels, these geometric levels, or whatever support resistance levels you use, you have to trust your work and try to stay in the position as long as possible, and let the market tell you to get out.
That is, if you have that discipline, and it's important for you to be there for the windfalls. Someone gave me a tip, and maybe our listeners could use it. I'm trying to use it more. But when you're considering taking profits on a winning trade, ask yourself if you would reverse there. And if the answer is no, you will just walk away.
That's a good one.
Isn't that pretty good? Because
Yeah,
I mean,
that's
I
really
get
good.
out of things I certainly wouldn't reverse on quite often. So if you just like ask yourself that one question, I'm long, yeah, I know it's been a good run, but would you short it here? Yeah. Anyway.
You know how one of the ways I keep myself out of trouble, because this is what I did when I first started trading, is I would see it hit a certain price and I'd say, well, I know it's going to do this now, and I know it's going to do that, so I need to do this. And it's when you start that mental game that you totally get yourself away from the reason you got into it and the reason that you should stay in. So stop the predicting and just deal with where price is and what it's telling you now. You know,
how did you develop that paradigm, Ben? Because I mean, you know, if you're walking the talk, because I mean, you could go to any webinar, and you know, anyone who's trying to teach or that, they're all going to say it. How do you walk the talk? It's just your conviction of your work. I think sometimes it's a paradigm that people have coming into the trading business that needs to change. And how did you change your paradigm to be able to do that? Were you always a disciplined 16 or 25-year-old guy?
No, I mean, I'm disciplined in a lot of other areas, but this area took a long time. And what you said is so important because what I've learned is the market is a mirror. And when you look into the market, it reflects back at you what's going on inside of you. And if you suffer from FOMO, it's going to show you all the little tricks and trades of FOMO, and it's going to dangle those little things in front of your face and say, hey, look at this FOMO, jump on this, jump on that, jump on this. So you got to get your head straight, and you got to figure out what's inside of you before you attack the market, because it is going to reflect back everything that's inside of you. It's going to show it right back to you. And the big change for me occurred when I started reading books not about moving averages and Fibonacci levels and retracements, but how to get the psychology of trading right, how to have the right mindset.
I have to, yeah, I have to share this from one of our viewers today, one of our attendees, from Manny. It's really classic. Another way is to take partial profits on a winning trade and let the rest run. My biggest profits come on the crumbs.
That's so true.
That's pretty cool. So even though maybe you had like a 10 lot on and you booked it, you keep one, and it turns into something you know you only imagined. Thank you, Manny. Anyway, you know, I love what we do here in Phase, and Ben, I mean, what a great interview. Were these the three markets that you wanted to cover today? Oh, crude too? Okay.
Yeah,
okay.
Yeah, let me give you a little look at crude. So here's the weekly crude.
Thanks for bringing my favorite stuff in.
Yeah, I did. Another interesting thing, right, is we made highs on the geometric resistance.
Yeah.
Tried to get above it, got stuck again, right? So now we have a nice big first move down, and we can put this pattern on it again, geometric pattern, and we see that, you know, crude's in a spot where, yeah, we could come up to here. I mean, I think 65, 66 is possible on a bounce. If there's a big time squeeze, we could get into the 70s.
Yeah.
But it's looking, again, it's looking lower because we're stuck. As long as we're stuck below this XB line, the pressure's to the downside.
And you know, so sometimes, and what do you think of this, Ben? Sometimes the hardest trades are the best trades because with what we're seeing on TV about what's happening in the Persian Gulf, it, you know, your response would be, well, God, I'm not going to short crude. There could be shooting overnight. There could be some type of accident. And so, you know, that's in your head. So it makes it hard for you to want to do that because of a maybe. So maybe, you know, you have to really just trade the price and not even worry about the news backdrop. But I would say most people want to be long crude into what's happening in the Middle East.
I'll tell you, Dale, one of the things that I always remember when that sort of thing comes in is there's an old saying, and it's so true. It's first the pattern, then the news. So if there's going to be some sort of hostility in the Middle East, you're going to start to see that in the price of crude. If we're going to war with Iran, if we're going to start some stuff in a skirmish in the Middle East to help Trump's re-election prospects, that chart's going to start showing it to you. So first pattern, then the news.
Thanks for mentoring me. So, you know, we all need to, no, really, we all need to be reminded of these things, because my paradigm, you know, I believe that, but I forget what I believe sometimes. You know what I mean?
Absolutely. It never. Yeah. That's why I listen to you guys every morning, because you're never good enough. You're never too old to learn. You just got to keep looking, keep trying to get better, keep listening to smart people, and listening to you guys every morning. You know, I pick up a nugget here or there, and it's totally worth it. And you have to be open. There was you like saying, there's one of my first bosses out of college in Wall Street. He said, when you're green, you grow. When you're right, you rot.
When you're white, you die?
No, he says, but the point is, be green, right? Be always ready to learn. Be always willing to learn. Be open to learning new things and getting better.
Yeah.
Well,
I'll tell. Go ahead.
No, go ahead. Go ahead.
No, you go ahead.
So here's some of the shorter term stuff, because I know people that like to day trade and like to do things on a shorter time frame. So we'll go zero down from the big picture to the sort of hand-to-hand combat every day. We put this stuff out every day for people. These are these +3 fuse lines. These are levels that can define short-term support and resistance and ways of reducing your entry risk on day trading the ES. And these are not cherry-picked examples. This is Monday, Tuesday, Wednesday. This is from the last 3 days. So you can see the way you use these lines, price comes down into it. Here it was vibrating around it. What you want to see is you want to see it get above and stay above, or get below and stay below. Here it couldn't. These are 4-minute bars, by the way. Here it couldn't stay on top of the line, got below it. So now you're looking at a reaction back to it. You get the reaction back, couldn't even get to the line, so you know it's weak. You can sell a reversal here, and you ride it down. That was Monday.
Okay.
Here's Tuesday. Same type of situation. The open's right here in green. So we have the fuse line here, so we know this is the important price for short-term day traders. We get above it, pull back to it, then we get a bar that stays above it. We know that the pressure is going to be the upside, so you could buy it in here on a reversal, or you could wait for this little pullback here, run above the line, buy this reversal here. The line's dynamic, so it changes during the day, and we post when it changes. Here's where the new line comes in, and you can see here you're crisscrossing it, so there's nothing to do. Here's where the setup comes. We get below the line, pop back up, fail here, catch a reversal swell there, and you can slide it down.
Okay.
Here's yesterday. Same type of action. But it's in the market all the time. And again, the tools are used to provide a small window where, if conditions are met, the edge is in your favor, you have an advantage, you can get into the market with positive expectations.
Okay, let me ask you this last question. Why 4-minute charts? Why did you choose 4 minutes? I know that you're, you know, and I want you to be able to let our viewers know where they could find you. And you said, you know, be open to learning, Ben. We learned today. I come in open when I could, you know, stop talking and listening. I learned quite a bit from you. In fact, this interview is even better than the first one. So why don't you share with the audience and people to be watching the video the best way to get in touch with you to pursue working together?
Yeah, our company Twitter is +3 Forecast. you can see the address up there. My personal Twitter is Dale posted it in the interview notice. So if you want to see what I do personally, the stuff from the company is which I'm a part of, and I have two partners that are really fantastic, and we all complement each other because we do different things. And when we all come to the same conclusions, it's a really powerful thing. So the 4-minute is related to the Earth. 4-minute is related to the time, the 360 days of the year, 360 degrees in a circle. So there's a geometric relationship with 4 minutes. So
Okay. I knew there was some geometry in there. Okay.
Yeah. So I trade the 4-minute for the shortest term time frame based on. But yeah, I enjoyed coming on. I'm glad it was edifying because that was the goal, and hopefully people can take something from this and make some money off it.
Ben, you know you're already my trading warrior brother. I love your analysis. I'm going to turn you into a regular and bring you in here every few months. So get a hold of me after this interview, and we'll book another day in the summer, late summer, and really appreciate you sharing your hard work and dedication, because you know people don't learn to do the things that you do without putting in the time and the energy to have acquired this. And you know what, you're a natural teacher too, because I learned from you today, and everyone thanks you. Hamid thanks you, Manny thanks you, and us here at ForexAnalytix thank you. May pips rain down on you, buddy, into the full moon and well after.
Well, thank you, Dale. You're like an angel, I think, for traders, and I would have appreciated finding you when I was first learning, but it's great to have found you, and the work you do is really, really beneficial to people trying to figure out how to do this in this crazy game that we play.
Thank you so much, Ben, and again, good hunting, a happy full moon, and as every other astronomic event, may we do well with this. I really liked your analog with 72 to 75. That was fascinating. So that's a wrap for, huh?
I said big changes coming, so everyone be ready. Just be open to it.
Yeah, I've been playing that song. There's a change a coming. You know, real good blues song. So, Ben, thank you, man. I appreciate you. So glad I met you on Twitter. See, it's not enough for me to buy Twitter stock, but you know what? Twitter has made a major difference in my career and my life by meeting people like you, Ben.
I'm grateful, Dale. Thanks so much.
All right, partner. All right, that's a wrap for us. We'll see everyone for TGIF tomorrow. Remember, don't just count your pips, count your blessings. You know, people coming in willing to share their knowledge with us every day. That sure is a blessing for me and everyone else part of our community. So adios, everyone. We'll see how the week wraps up. Thank you again, Ben.
Take care.
All right.